This TFMR podcast is brought to you by your friends at JM Bullion. Visit jmbullion.com for all your gold and silver bullion needs. Welcome back to another episode of the TF Metals Report weekly podcast highlights for the week of April 12th through the 16th, 2021. Again, we record podcasts every day for our members at TF Metals Report. It's a summary of all the day's events. It goes along with a morning post. That's a summary of all the news and the overnight events. Great value for your subscription at TF Metals Report, if I do say so myself. And it's only 50 cents a day. If you're interested in the precious metals and the mining shares, you should strongly consider a subscription, seeing that we are now wrapping the week on Friday, looking like prices are breaking out and resuming their uptrend. Back on Monday, however, we were subject to some blatant, overt price manipulation by the banks as silver was jammed backward for 50 cents, all while the dollar was trending lower and interest rates were stable. So one of those things we have to overcome from time to time in the precious metals, and that's what we were talking about on Monday, April the 12th. Then you look at the silver intraday chart, and it's the same thing. Again, silver going nowhere when it's just the computers, before anybody's really trading in New York, because the dollar wasn't going anywhere. And then as soon as the COMEX open, it gets hit, gets below the 200-day moving average, which again today was 25.20. Briefly pops back above there, and then here they came, hanging in there at 25.15, and then in the last maybe 10 minutes before 9 o'clock Central, smash, pound town, highest volume of the day, dollar not going anywhere, bond market not going anywhere. So you know this is an HFT. No, this is the banks. I have no doubt in my mind. Smashing price down, highest volume of the day. You get one more little bounce, they smash it again on higher volume at about, what's that, about 9:30, 9:40 Central Time. And then everybody just goes home, mission accomplished, goes sideways until, of course, this last smash taking us back to the lows of the day. On Tuesday, however, our focus turned back to gold. We had very hot inflation report come out, and the annualized CPI in the U.S. is now 2.6%, and this is dropping the real or inflation-adjusted return on the 10-year Treasury note back to almost negative 1%. That's where we were last summer, when gold was near $2,100. So is the trend changing? Are we getting close to breaking out? That was a topic of discussion on Tuesday the 13th. So then you got to look at gold. Now, when I printed this chart off earlier to use in my Sprott Money post this week, price was $17.42. It's now $17.45. So this is still pretty accurate. But these are those tripwires I was telling you about. Okay. First, we're going to move toward the 50-day moving average, which today is 1758, but by tomorrow it'll be about 1755. We could get there tomorrow if the bond market continues to rally. Get above that 50-day, well, then 99% certainty we're going to take a stab at that purple bull flag arrow. If we can get a base above there and then get above 1780, and those double bottoms from late November and late February. And again, remember, back last summer, 1780 was resistance, 1680 was support. Well, we found support at 1680, obviously, but now 1780 will be resistance again. So you can see all these things coming together. But in the next couple of weeks, get back above the 50-day, get above the bull flag and hold above, and then start making a move above 1780. That's going to get all kinds of attention. Then we're going to be talking 1820, and we're going to be talking the 200-day, which by then might be 1860 or 65. And then all of a sudden, 1880. See how this builds on itself? That's what I'm talking about. And that's what we'll be watching. And, of course, if gold's doing that, well, you can imagine silver will be doing well, too. As part of our daily podcast on Wednesday the 14th, we took a long look at the mining shares, at least as measured by the popular ETFs GDX and GDXJ. And we were quick to note that both of those ETFs look to be moving solidly higher, getting above their 50-day moving average and making higher lows. Could this foreshadow more strength in the precious metals, or at least get us excited about upcoming earnings season? The answer was yes. And finally, with the shares, I thought I would show you this. Again, I mean, how could it not be a bad day in the shares? They just pounded gold, so they just laid on the shares all day long, too. However, it is not out of the question that we rally from here. The rest of this week, GDX, now clearly above its bull flag line, right? And above its 50-day moving average. So the GDX is above its 50-day. However, gold is not. Tells you which way gold is ultimately going. And again, the key here, key level that I'm watching into Friday is 35. Right? If we had not been smashed today, we might have been over 35 right now. But we'll see. It's only 2% from here. And I think we got a legitimate shot at it for a weekly close above 35. That's what I'll be looking for. Now look at the GDXJ. Look really close. Where this GDX, the low in the GDX today was where? Right at the 50-day moving average. Now maybe they'll jam it down again and try to ride the purple arrow again, but it's clearly above that purple arrow. And if the GDXJ can close above 49 on the week, I mean, you can see that with your own two eyes. A weekly close above 49. Not out of the question. We were as high as 49 yesterday. So we'll watch that level tomorrow and Friday. And on Thursday, April the 15th, our warning and our request that everybody just be patient and wait to see what happens Thursday and Friday played out as we had hoped, with gold breaking out above its 50-day moving average and looking a lot like the breakouts that it posted a couple of times in 2019. Could we follow on that action on Friday, confirming the breakout and setting up a similar situation to stout double-digit rallies like we saw in 2019? Well, maybe. We talked about that on Thursday in preparation for what would be an interesting Friday. All right, and what else are they going to try to accomplish? Well, it may be too late for trying to restrain at the 50-day. But what makes tomorrow so interesting is if we can follow on tomorrow with another rally after today's break of the 50-day, then today's chart, this week's chart, this current chart will look a lot like this chart I gave you this morning of gold back in 2019 into early 2020. Again, we are currently in a bull market. There's no doubt about that in my mind, right? Just as we were currently in a bull market when this was playing out in 19 and 20. Notice how, again, we went up, peaked out in August, pulled back, finally fell below the 50-day rather convincingly, again, as you can see on the previous chart, back in February. And then just kept being pressed lower. And then now today we're above it. Well, if you look at this chart, I mean, this is extremely important. From February to end of May in 2019, we were pressed below the 50-day until we finally got above it. Once we got above it, we rallied for the next 3 months and rallied 19% from 1320 to 1570. Then fell back. Tried to hold the 50-day support, couldn't do it. Finally really broke down for about 2 months in November and December of 2019. Till December 24 when we finally got above it. Once we got above it, we rallied for about the next 70 days. A total of 13.1% from 1490 to 1705. But here's the thing. You see that blue arrow to show you where we broke out above. Notice in both cases, the day after the breakout above the 50-day was followed by another big green candle. So let's watch really closely tomorrow to see what we can do. If we could put on another big green candle, one, it would make this chart look like we're just following the same pattern and definitely set us up for what I've said. The rally here of 15% over the next 60 days back up to 2,000. But it would also, big green candle tomorrow, would blast us out the top of the bull flag, would probably even get us above 1780. So tomorrow we're going to really want to watch to see what happens. And as we wrap up the week on Friday, April 16th, it's great to see gold add another big green candle, just as we discussed in yesterday's podcast. We got a little ways to go, maybe another hour and a half before the COMEX close. However, gold is trading right up near 1780, and we do now have a second follow-up big green candle above that 50-day moving average. Things now look to be progressing just as they have with the other breakouts in 2019 and in 2020. Get above that 50-day and begin to extend. Of course, this is all under the shadow of sharply negative real interest rates back to levels not seen since August. But price of gold is not back to levels seen since August, and that market inefficiency will fix itself over the next few weeks and months. So we're very excited at TF Metals Report to see this action today, and we're excited to see where we go next week. Please join us if you can. It's only $15 a month or 50 cents a day. You'll love the community, and I think you'll get something out of the analysis too. Find more information at tfmetalsreport.com. Thanks for listening, everybody. We'll talk to you again next week.